Welcome to The Deep Dive. Today, we're taking on a really specific challenge you've given us, a deep dive into Sula Vineyards.
Mm-hmm.
Our mission is to unpack everything that an investment decision maker like you would need to know.
Right.
We've meticulously analyzed excerpts from a key source, Sula Vineyards, Market Leadership and Growth Strategy, and, well, it's absolutely packed with insights, really relevant for understanding this company from an investor's point of view.
And our goal here, as always, is really to cut through the noise. We want to extract the most important bits of knowledge, the actionable insights from these sources.
Mm-hmm.
We want to help you quickly get, properly informed on Sula's investment profile to really understand its strengths, the challenges it faces, and where it's headed.
And why should you, an investor, care so deeply about Sula? Well, because over the next few minutes, we're going to walk through Sula's foundational market standing.
Mm-hmm.
We'll dissect its recent financial performance, especially in what was a challenging environment. We'll identify the core drivers behind its growth, shine a light on the specific risks it seems to be expertly managing, and finally sort of articulate its long-term strategic vision.
All crucial elements, really.
Absolutely crucial for any informed, thoughtful investment decision you might be considering.
Sula Vineyards' market position. A category leader.
So let's open this up with the big picture then. What exactly is Sula Vineyards' current market position? And maybe more importantly, how do they actually build that position in the Indian market? Because, understanding market leadership is just fundamental for any investment.
Well, what's immediately fascinating, and you see this right away in the source, is Sula's undeniable dominance. It's almost staggering, actually.
Okay.
The sources make it unequivocally clear. Sula Vineyards is, without a doubt, India's largest wine producer. Now, this isn't just like a casual claim.
Right.
It's quantified. The source emphatically states Sula commands more than 60% market share in the elite and premium domestic wine segment.
Wow, 60%.
Yeah, think about that for a second. In a market as vast and rapidly evolving as India, controlling over 3/5 of the most lucrative segments, that speaks volumes.
It really does.
It's not just volume, it's controlling the part where margins are highest, where loyalty is strongest. That kind of share and premium is a powerful indicator of brand strength, pricing power, and just the effectiveness of their whole operation.
That 60% number is quite a statement, especially, like you said, given how young the modern Indian wine industry is, relatively speaking. How did they manage that kind of penetration in a country maybe more used to spirits or beer? Where did this journey start?
It really is a testament to pioneering vision and just consistent execution. Sula started this journey back in Nashik, Maharashtra in 1996.
Okay.
And at the time, Nashik wasn't really a recognized wine region, but from that single starting point, they've expanded, aggressively and strategically. Today, Sula boasts 5 operational wineries across key regions, mainly Maharashtra and Karnataka, and they cultivate grapes across more than 2,800 acres.
That's a lot of land.
It is.
Yeah.
And this footprint doesn't just give them a strong production base. It gives them significant control over their supply chain. Quality, volume that's critical for their premium positioning and scaling up. That vertical integration, grape to bottle, that's a massive competitive advantage.
So it's not just about being first mover, it's about strategically building out the whole infrastructure. But leadership, well, it isn't just about what you produce, right? It's how you innovate, how you maybe even define the market. What were some of those critical market-shaping moments for Sula?
Exactly. Sula didn't just grow in the market. They actively shaped and, you could argue, expanded the market for wine in India.
Yeah.
They were real pioneers in shifting wine from this niche thing to more of a mainstream aspirational choice.
Okay.
Consider these milestones. They're actually quite groundbreaking. In 2005, Sula launched India's very first wine tasting room.
The first one.
The first one. Before this, the whole idea of going to a winery, seeing the process, tasting different wines in a dedicated space.
Right.
It was pretty much unheard of in India.
Right.
This wasn't just sales, it was cultural. It made wine an experience, an occasion. It educated consumers, built a community, really accelerated adoption.
Makes sense.
Then, in 2010, they doubled down on that experiential idea by establishing India's first vineyard resort.
A resort. Wow.
Yeah. Now, it wasn't just about selling wine, it was selling the whole lifestyle.
Yeah.
People staying amidst the vineyards, dining, workshops, immersing themselves in the Sula brand. That creates a really powerful connection. It became a destination.
I could see that.
And their innovation goes beyond just the experience to the product itself and making it accessible. Sula was behind India's first wine in a can.
Oh, yeah, I remember that.
It seems simple, but it was brilliant strategically.
Yeah.
It kind of democratized wine, made it more approachable, convenient, for casual drinking, younger people, outdoor events, showed real adaptability. And underpinning all of this, the painstaking development of a truly robust pan-India distribution network, getting wines onto shelves everywhere, navigating complex state rules. That's a massive logistical achievement.
That is a powerful story of evolution. Sula, it sounds like, didn't just join the Indian wine industry. They arguably created the modern version of it. So what does this history, this leadership, this constant innovation mean for someone looking at Sula as an investment?
Well, from an investment manager's viewpoint, this isn't just a nice story. It translates directly into real, tangible, competitive advantages. The source clearly highlights this. Market leadership and brand recall are seen as strong competitive advantages,
Right.
creating high entry barriers. What does that mean practically? It means any new player trying to get into the Indian wine market faces huge, almost insurmountable challenges.
Okay.
They need to replicate Sula's vineyards, wineries, their relationships with hundreds of growers, that complex distribution network, and, maybe toughest of all, the brand recognition built over decades.
Yeah, you can't just buy that overnight.
Exactly. These elements form a formidable moat around Sula's business. Makes it incredibly difficult, very capital intensive for anyone else to seriously challenge them. And that provides a level of stability and predictability that's very attractive to long-term investors.
So as an investor, you're not just buying into a company selling stuff. You're buying into a brand that's already cornered a big, valuable slice of the market and built this, well, almost unassailable competitive moat. That kind of dominance and defense sounds like a solid foundation for long-term value, especially in an emerging market.
Precisely.
FY25 financial performance, navigating headwinds with resilience.
Okay, shifting gears a bit from their impressive market leadership, let's dive into the numbers. How did Sula actually perform financially in FY25? We heard it was a challenging year, so what were the key operational highlights and what specific hurdles did they face?
Yeah, the source rightly calls FY25 a difficult yet resilient year for Sula. That phrase itself tells a story, right? A company facing strong external pressures but managing to hold its ground. The broader wine industry, like a lot of consumer discretionary sectors, faced some serious headwinds. The biggest was probably a noticeable urban consumption slowdown. Urban centers usually drive premium sales, so a dip there hits companies like Sula directly. When consumers tighten their belts, premium wine can be one of the first things they cut back on.
Makes sense. And what about the other pressures? You mentioned regulatory stuff and elections. How did those play out for an alcohol company specifically?
Absolutely. Beyond the slowdown, Sula had to deal with significant regulatory headwinds. The alcohol industry in India is, well, it's highly regulated, often state by state.
Right, very complex.
Very excise duties, licenses, distribution rules. Things can change quickly. That impacts pricing, availability, creates an unpredictable environment.
Yeah.
And on top of that, you had national and state elections during the period. That often leads to a general economic slowdown. Businesses, consumers kind of wait and see. Plus, you can get supply chain disruptions, temporary restrictions on alcohol sales. It all adds uncertainty. So yeah, definitely not smooth sailing.
Considering those pressures, it sounds pretty impressive they managed any growth. What were the specific financial bright spots? What achievements stood out despite the challenges?
Well, despite those notable challenges, Sula posted some really impressive financial highlights. Highlights that really underscore their operational effectiveness. They reported their highest ever revenue from operations hitting 619.4 crore.
Highest ever.
In that environment.
Highest ever. To hit a record revenue figure in a year with those slowdowns and uncertainties, it shows strong underlying demand and really effective sales strategies. They were actively fighting the conditions.
Okay.
Their core business, own brand revenue, rose a steady 2.2% year over year to 546.2 crore. Now, 2.2% might sound modest.
Yeah.
But remember the context. In that year, sustained growth in their own high-margin brands, that's a very positive sign. Shows resilience, customer loyalty.
Right.
And maybe even more telling for an investor. Operating EBITDA came in at 149.1 crore. That's a robust 24% margin.
24%. That's strong. It is exceptionally strong, especially with those headwinds, for a consumer goods company with agricultural ties. It really suggests not just cost control, but the inherent profitability of their premium strategy and their operational efficiency. It feels structural, not just a fluke.
That margin, yeah, 24% really does stand out. And what about things like capital efficiency and debt? crucial for a capital-intensive industry like this.
Excellent point. Their return on capital employed, ROCE, stayed healthy at around 18%.
Okay.
Now, for an investment decision maker, ROCE is critical. It tells you how efficiently the company uses its capital to make profits. An 18% ROCE in a business needing big investments in vineyards, wineries, distribution, that suggests really good management, strong asset use. Every rupee invested is generating a healthy return.
Good sign.
And crucially, for financial health and future flexibility, their net debt to EBITDA stayed comfortably below 2x.
Below 2, that's quite low.
It's very strong. Signals a well-managed balance sheet, manageable leverage. For an investor, it means the company isn't overburdened by debt, has financial flexibility for future growth, organic or maybe acquisitions, and is well-positioned to weather future downturns. Sub 2x is often seen as, a gold standard for prudence.
Oh, okay.
And finally, their wine tourism revenue. It started as complementary, but it's becoming significant. Hit 60.3 crore, up a solid 10.2% year over year.
10% growth there, too.
Yeah. That growth further diversifies their income, proves the ecosystem strategy is paying off, and provides a valuable buffer against purely product sales fluctuations.
That's a really comprehensive picture of resilience. So what does this all mean through that investment lens? How should someone making an investment decision interpret these numbers in the bigger picture?
Well, this financial performance clearly demonstrates Sula's ability to not just survive, but actually weather significant short-term volatility while protecting its margins and keeping the balance sheet strong. For an investor, it sends a powerful signal. You're looking at a company with robust fundamentals, proven operational discipline, and a management team capable of navigating external pressures effectively.
Right.
It means market conditions might fluctuate, but Sula has shown this remarkable capacity to maintain its core financial health and profitability. And that's incredibly reassuring for a long-term investment.
Absolutely. It's about that resilience, isn't it?
Yeah.
A strong core business that holds firm even when things get choppy. That kind of stability plus consistent profits is incredibly valuable when you're looking long-term, especially in an emerging market that can be volatile. Knowing your investment can perform when tested, not just in the good times.
Exactly.
Core growth drivers. A multi-pronged strategy.
All right, we've covered their market dominance, their financial resilience. Now let's really dig into the how of their growth. What are the core drivers, both historically and looking forward, that are really fueling Sula's expansion? Because it's clearly not just one thing.
You're absolutely right. It's far more nuanced. Sula's growth story comes from what the source describes as a truly multi-pronged strategy. It's quite comprehensive.
Sure.
It seems centered around three key pillars that are kind of intertwined. First, product leadership, making sure they offer top quality and innovative wines. Second, premium positioning, really targeting those higher value market segments where margins are better. And third, experiential offerings, creating unique, memorable engagements for consumers. This whole synergistic strategy seems to be what makes their growth engine so powerful.
That's a great framework. Let's break down those specific levers then. You mentioned premiumization as key. What does that actually look like for Sula, and why is it so important?
Okay, so the first and arguably most significant driver is premiumization. This isn't just a buzzword for them. It seems absolutely central to their profitability. Their elite and premium wines now make up a substantial 77% of their own brand revenue.
77%. Wow.
Yeah. And what makes this really compelling for an investor is the growth rate. This segment has been growing at a compound annual growth rate, a CAGR, of 21% from FY21 to FY25.
21% CAGR. That's huge.
It is. It tells us two critical things. One, consumers in India are increasingly looking for higher quality, more sophisticated wines as incomes rise and tastes evolve. Two, Sula has masterfully positioned itself to capture that shift. They've invested in premium varietals, elevated their brand perception, made sure distribution caters to discerning consumers. It's not just selling more bottles, it's selling higher value bottles. That directly impacts profitability, average price per case, and their overall brand equity as a quality leader. For an investor, it signals a shift towards a more resilient, higher margin business model.
And their wine tourism, you mentioned that earlier, grew nicely too. How has that become such a powerful growth engine? It sounds like more than just a nice side business.
Indeed. The second critical driver is wine tourism. It's shown explosive growth, staggering 35% CAGR over the past 4 years.
35%.
35%. This isn't just incidental revenue. It's a fully integrated, high-growth part of the business now. That growth comes from increasing resort occupancy, the huge popularity of events like SulaFest, which attracts thousands and has become a sort of cultural phenomenon, and their focus on creating really immersive guest experiences at their vineyards.
Right.
For an investor, yes, it's a significant high-margin complementary revenue stream. But it's more than just the money. It's a powerful marketing and brand-building tool. People who visit often become loyal advocates. That direct interaction fosters a unique brand association that goes beyond the bottle, builds an emotional connection, drives repeat purchases, strengthens loyalty. It's a direct channel for feedback, too.
That's a really clever way to build loyalty and diversify revenue. What about reaching new markets, though? India is huge, incredibly diverse. How are they tackling geographic expansion?
Good question. The third key driver is strategic geographic expansion. Sula started in Maharashtra, strong roots there, and in Karnataka, but future growth really hinges on expanding across the whole country.
Makes sense.
Sales outside those traditional strongholds grew a healthy 8% year-over-year in FY25. And even more impressively, 11 different states showed double-digit growth.
11 states in double digits. Okay.
Yeah. This indicates a successful strategy of diversification. Reduces regional risk, taps into vast new consumer bases. Expanding into new states needs big investment in distribution, marketing, navigating local rules. So this success shows their operational strength and strategic foresight in building a truly pan-India brand. For an investor, it signals untapped potential, a long runway for growth beyond their core markets.
So they're expanding their reach. What about keeping the product fresh? How does ongoing product innovation fit into the strategy?
That brings us neatly to the fourth driver, product innovation. Sula consistently shows it's committed to evolving its portfolio. Examples include launching Sula Merlot, which appeals broadly, and expanding formats like wine in a can.
Right, the cans again.
Yeah. These aren't just one-offs. They represent a strategic commitment to responding to the market. They've also strategically deepened their presence in channels like the CSD, the Canteen Stores Department. For an investor, that's a very stable, high-volume channel, reaching a significant consumer base.
Okay.
This consistent innovation keeps the brand fresh, relevant, accessible to a wider audience, making sure they capture new segments as tastes evolve. It's about maintaining leadership through continuous evolution.
And finally, something that's increasingly critical for investors, for consumers' sustainability. How is that baked into their growth strategy? Is it just optics?
Absolutely not just optics. The fifth driver, sustainability, seems deeply embedded in their operations and strategy. They've made real commitments with tangible benefits. For instance, 66% of their energy needs met through solar.
66% solar. That's substantial.
It is. And it's not just environmental. It means significant long-term cost savings, less vulnerability to energy price hikes. They've also carefully reduced water usage per case by 5%, implemented widespread recyclable packaging. For an investor, these efforts enhance the brand's reputation, appeal to environmentally conscious consumers, and contribute to long-term operational resilience by mitigating resource risks. It's about building a future-proof business, environmentally responsible and economically efficient.
Okay.
What's really fascinating when you pull all these drivers together is how they interlock. They highlight a business that isn't just selling wine, but building this whole ecosystem based on strong brand equity, customer experience, and disciplined execution, all contributing to long-term profitable growth. From an investor's view, it shows a diversified, sustainable growth path. Sula isn't relying on just one engine. It has multiple interconnected strategies driving it forward. It's quite a sophisticated approach.
Yeah, it really sounds like it's not just about selling more bottles. It's about creating this entire vibrant ecosystem around the brand. That makes it much more robust, more resilient for your long-term investment horizon. It shows a strategic foresight beyond just simple sales, positioning them maybe even as a leader in a broader lifestyle category.
I think that's a fair assessment.
Enterprise risk management, mitigating potential threats.
Okay, no investment deep dive is complete without looking hard at the potential downsides. Every strong company has vulnerabilities. So what are the key risks Sula faces, and how are they actively managing them under their enterprise risk management, their ERM framework?
That's a crucial line of questioning, absolutely. Sula operates in an industry that is, well, inherently dynamic. It's sensitive to multiple external factors.
Like what specifically?
Firstly, it's particularly susceptible to rapid shifts in consumer preferences. Tastes change, trends emerge, economic conditions impact discretionary spending on things like wine. Secondly, significant regulatory hurdles. We touched on this. The alcohol industry in India is maybe one of the most heavily regulated, complex, unpredictable policies at national and state levels.
Right, the state level complexity.
Exactly. Changes in taxes, licenses, distribution rules can profoundly impact operations. And thirdly, wine is agricultural. So production is inherently sensitive to agricultural inputs, weather, disease, grape yields. These pose real challenges to supply and quality. Recognizing this complex risk landscape, Sula has established a highly structured ERM system to proactively identify, assess, and mitigate these threats.
So they have a formal system. Can you walk us through some specific risks in Sula's structured responses? Let's start with demand fluctuations, which you mentioned.
Certainly. For demand fluctuations common in consumer goods, especially premium ones, Sula mitigates this through ongoing product diversification. They aren't overly reliant on one wine or price point. They have a broad portfolio.
Okay.
Simultaneously, they're constantly expanding their consumer base across India. This broadens their appeal, reduces vulnerability to slowdowns in specific segments or regions. Reaching diverse demographics with varied products creates a more stable demand profile overall.
And what about those tricky regulatory hurdles? That sounds like a constant battle in India.
Regulatory hurdles are persistent, yes, but Sula has a robust strategy. They manage it through rigorous state-level compliance, investing heavily in understanding and following the laws in each region. Crucially, they have that highly diversified state presence operating in 23 states and 7 union territories.
Right, the geographic spread.
That spread is a key de-risking factor. A negative change in one state, say, a sudden tax hike or distribution restriction might be offset by stable conditions elsewhere. It acts like a natural hedge. They also strategically optimize their presence in the CSD channel, which, for an investor, is a stable, transparent, regulated sales avenue, providing a consistent revenue stream somewhat insulated from general market volatility.
That makes perfect sense for de-risking. And the agricultural side, how do they handle potential supply chain issues, given they rely on grape harvests?
For supply chain disruptions, which could be anything from bad weather affecting harvest to transport logistics, Sula addresses this with long-term contracts. They have them with over 500 independent grape growers.
500 growers.
Over 500. This network provides crucial raw material security and predictability, ensuring a consistent supply of quality grapes. It's a symbiotic relationship. Coupled with these contracts are incredibly consistent, stringent quality control protocols across the whole supply chain, vineyard to winery. This ensures that even with a broad grower network, the quality and character of their grapes, and thus their wines, remain uniformly high, protecting that premium brand image.
Okay. And finally, we talked about sustainability as a growth driver, but it also sounds like a risk mitigation strategy, especially around cost pressures. How did that work?
Precisely. For sustainability and cost pressures, which are increasingly linked, Sula addresses these proactively. There's significant renewable energy adoption that 66% solar directly insulates them from rising electricity costs and reduces their carbon footprint.
Right, saves money too.
Exactly. They also prioritize local sourcing where possible, reducing transport costs, strengthening local supply chains, minimizing external dependencies, and their ongoing lightweight packaging initiatives.
So the big takeaway here seems to be that Sula isn't just aware of the challenges. It has concrete, well-thought-out strategies in place to navigate them. This strong risk management framework makes it a potentially much more stable investment. They're not just hoping for the best, they're actively planning for and mitigating the worst. That's incredibly reassuring for any investor.
I agree. It points to mature management.
Medium to long-term strategic vision, untapped market potential.
Okay, we've explored their past, their present resilience, their risk management. Now let's look firmly ahead. What's the company's medium to long-term strategic vision, say FY25 to FY28 and beyond? And what does that future roadmap imply for your investment outlook? Because often what a company plans for the future tells us the most about its untapped potential.
Yeah, that's where the real excitement for an investor often lies, doesn't it? Sula's stated strategy for FY25, FY28 is incredibly clear and very investor-friendly. They are laser-focused on accelerating earnings growth while simultaneously improving capital efficiency and operating margins.
Okay, that dual focus is key.
It really is. It signals a commitment not just to growing revenue, but growing it profitably, with smart, disciplined use of capital, maximizing returns on every rupee invested. They're aiming for quality growth, not just quantity.
That makes sense. So what are the specific strategic priorities Sula has outlined to actually achieve this ambitious vision?
Okay, let's delve into those specific priorities for this multi-year plan.
Yeah.
First, they're committed to new product development as a continuous engine. Their goal, launch at least one new wine every single year.
Every year. Okay.
Yeah. Keeps things fresh, ensures innovation, lets them capture evolving tastes. Beyond new launches, they plan to expand their elite labels nationally. Critical step in solidifying that premium position across the country, reaching a broader, more affluent consumer base looking for sophisticated wines, deepening their presence at the top end.
Right.
Second, capacity expansion. Sula aims to increase cellar capacity by a significant 1 million liters by FY26. But what's really noteworthy, and a huge plus for investors, is they plan to do this with 33% lower capital expenditure than previous expansions.
33% lower CapEx. How?
It's a powerful testament to their focus on capital-efficient growth. Means they can expand capabilities to meet future demand without spending as much upfront. That directly translates to better returns on capital, less financial strain, quicker payback. Suggests they're leveraging existing infrastructure, optimizing the process. Very smart.
That is smart growth.
Okay.
And the tourism segment growing so well, how does that fit into the future?
Remains a core pillar. Third priority, continued tourism growth. They plan new resorts and tasting rooms in key locations. Beyond Nashik, specifically mentioning Vineyard, York, and Karnataka.
Expanding the footprint there too.
Exactly. Aggressively expanding the experiential segment leverages their strengths, diversifies revenue further. Each new place creates more opportunities for direct consumer engagement, immersive experiences, and those higher margin direct sales. Turns their vineyards into destinations, builds deeper loyalty.
Makes sense.
Fourth, brand outreach. Significant priority for broader market penetration. Includes scaling up flagship events like SulaFest, expanding pan-India tasting events, bringing the Sula experience directly to consumers, and crucially, deepening their presence in newer, high-potential markets like Andhra Pradesh, a large, relatively untapped base. All about broadening reach, reinforcing the premium identity, capturing new demand pockets.
And what about distribution channels? Are they targeting specific ones to boost reach and maybe profitability?
Absolutely. Fifth priority, strong focus on D2C, direct-to-consumer, and CSD expansion. Explicit goal, double CSD listings, enhancing reach in that structured channel. Concurrently, robustly grow DTC sales channels.
Why D2C specifically?
Astute move for investors because DTC channels usually offer significantly higher margins, bypass retail markups. Plus, more control over customer experience, richer data collection for personalization. Both pathways enhance distribution and boost margin potential.
Got it.
Finally, Sula is strategically open to M&A mergers and acquisitions, targeted acquisitions within the Indian alcobev space. Indicates a proactive stance on inorganic growth, potential market consolidation. Acquiring smaller players or complementary brands could let them quickly gain market share, access new distribution, acquire capabilities, or integrate talent. Further strengthens their leadership, accelerates growth.
Okay, quite a comprehensive plan.
It is. And what's truly fascinating here, critical for an investor, is how this whole vision aligns perfectly with broader, undeniable long-term trends in India. Rising disposable incomes, expanding middle class, consumers becoming more discerning, globally aware. The demand for premium experiential products like wine is naturally poised for exponential growth.
Right.
The source highlights a profoundly important statistic. Wine still accounts for less than 1% of the total Indian alcobev market.
Less than 1%.
Still. Let that sink in. It's profound for an investor because it means Sula, as the leader, is incredibly well positioned to capture a truly vast amount of untapped demand as the market matures.
Huge potential upside.
Huge. For investors, this presents not just an opportunity, but a compounding opportunity in a high-margin, underpenetrated category with substantial headroom for growth for decades. It's not just growing in an existing market. It's leading the charge in a nascent, rapidly expanding one with minimal competition at their scale right now.
So the big takeaway here is you're looking at a company that not only sees this vast, growing, relatively untapped market, but also has a clear, actionable, and capital-efficient plan to capture it. This long-term strategy shows incredible foresight, provides a solid roadmap for sustained value creation. Makes it a genuinely exciting prospect for future returns. It's about being right at the front of a major shift in consumer behavior.
Precisely. It's hard to overstate that potential. Outro. So, to synthesize everything we've meticulously discussed today, Sula Vineyards really does stand out. It's an undeniable category leader in Indian wine, bolstered by incredibly strong brand equity, that strategic, profitable shift towards high-margin premium products, and a rapidly growing complementary wine tourism revenue stream. And all of this, crucially, underpinned by a clear, tangible focus on sustainability, vital for long-term viability, cost efficiency, and appealing to modern investors and consumers. Its future strategy isn't just ambitious. It seems backed by disciplined capital allocation, robust risk management, and that clear, actionable vision we just discussed. It definitely addresses both the immense market opportunities and the potential challenges.
So for you, the investment decision maker listening, this deep dive reveals a company that isn't just, surviving headwinds. It's strategically positioned for significant long-term future growth in a vastly expanding market.
Right.
It operates with solid financial fundamentals, a keen, proactive eye on risk, and a well-articulated roadmap for continued market leadership. It really paints a picture of a well-managed entity with clear, compelling avenues for sustained value creation. As you consider all this information, here's maybe a thought to mull over. Given India's rapidly growing middle class, its urbanization, those changing consumption patterns towards aspirational lifestyle choices, how might Sula's current strategic focus on premiumization and its expanding experiential offerings, the tourism, festivals, resorts, position it not just as a top wine company, but maybe as a truly key player in the broader, burgeoning Indian lifestyle and hospitality sector?
That raises a really important question for your investment thesis, doesn't it? Could Sula's diversified, integrated approach to growth blending, product innovation, immersive tourism, powerful brand building, ultimately make it a more resilient, dynamic, and uniquely attractive investment than, say, a pure-play beverage company in the long run? It's certainly something to deeply consider as you weigh your options and look towards the future of Indian consumer markets.
That's all for now. Thanks for watching. If you like the analysis, then please like and share. Please subscribe to our channel for more such videos.